Okay, stock market charts. Let's get into it. We're going to use technical analysis to try to find our next trade. All right, guys, we're going to start out today with the SPY, the SPY proxy for the S&P 500, and we're kind of at the short-term support on the hourly. You can see that right there on the hourly chart. This is the form of resistance. This is the support area of 441.80. This is where the buyers are likely to step in and just keep grinding this thing higher. Now, if you look at the daily chart, again, we're just kind of grinding higher on these really low volatility candles. Not a lot of price movement. So just continue. I'd expect that to just continue until we see a technical change. As of right now, I see no technical change in the posture of this chart. The price SPY is up, so the trend is up, but the momentum indicators down below are negative. They're bearish. And momentum often leads price. So I'm expecting price to obviously continue to grind higher, but I still think at some moment in the near future, it's likely going to have a catalyst or something that is going to start a new downtrend in the markets. That's what the momentum's telling me, even though price continues to trend higher. Looking at the Qs, again, we've gone nowhere for the last month. This is almost coming on a month of just sideways action right here. So we need to resolve one way or the other. Until I see a resolution, there's no trade here. It's just we're just watching it grind around. Momentum has negative divergence right here on the RSI and the PPO, telling me that we're likely going to resolve to the downside and break. But we need to see that price action. We need to see a breakdown candle or a sell signal. I'm kind of looking at the lower ends of this range right in here as an impulsive break of this lower support area as the next sell signal. So if we start to see a breakdown like that, then I think we start to head lower. Until then, chopping sideways. Small caps gone nowhere. These have gone nowhere since the beginning of the year. So they're just sideways, big sideways range, and that just continues. So until we see a resolution one way or the other, nothing to do here either. You can trade the range if you want. You could buy at support, which is down here at about 209, sell or short at 233.24, which is resistance, and just trade that range. And if you've done that this year, then it's been a very profitable trade. Eventually this range will break down or break out, and we'll move out of this range. But that's what I see on that one. Large cap tech. Okay, so I cover these a lot because they're just the leaders of the market. They're such large companies. They're weighted so heavily in the indices that they can really move the market around. And large cap tech, you can see Amazon. We still have that bear. We're just continuing lower. So as far as I can tell, just heading down to this 2,933 zone. So yeah, I'm still seeing lower prices in Amazon. Probably another 8 to 10% lower. Apple chopping sideways, and again, I've got it circled here. We've really gone nowhere. This is a divergent high, meaning we've made a new high in price up in this zone, but it's on negative divergent momentum. So negative momentum, and ultimately it's just gone nowhere for over a month. So again, it can seem pretty repetitive because I say the same thing for about a month straight. A month straight. When we get this price action like this, then there's nothing else to say. It's literally just chopping sideways with negative divergence, looking for a breakdown, but no breakdown in price yet. Facebook still holding this bearish rising wedge pattern right here. You can see we've just been grinding higher, making a bearish rising wedge with negative divergence in the momentum. You'll see here negative divergence right there. Let me kind of tighten that up on the PPO, and negative divergence on the RSI, and making a bearish rising wedge pattern, but still really holding it right there at support. So likely going to bounce and just continue within this pattern until you get a sell signal or an impulsive break out of the pattern to the downside is where I assume it goes. That's the probability. Doesn't mean it has to do that. And Google just continues to grind along this trend line right in here. We're below the trend line. We did break down yesterday. Today they're bouncing it up. Still below the trend line though. So, we need to see impulsive selling for the next sell signal. We just don't see that. We see just grinding around action. So until you see that impulsive selling, there's really just nothing going on here besides kind of this slow grind higher, but with negative momentum, negative divergence building. And oftentimes, if you roll back and look at something like the SPY, let me just show you typically how these divergences play out. If you go back and look at the COVID drop right before we had that COVID drop right in here, you can see we had the same thing building. We had negative divergence really starting to build right about there on the RSI, and it's there on the PPO as well. But you can see this lasted for a couple months, basically, about 2 months of just this diverging, negative divergence, grinding higher price action, and then a big swift move down. So I'm looking for something like that. That's why it's like picking up nickels in front of a steamroller. Yes, there's likely going to be a slow grind higher as we continue to grind, but the upside is limited and the downside is potentially a lot more. I'm not saying it's going to be a complete crash like this, but I could see a 10-20% drop in stocks with maybe another 5% more upside with a 20% drop. That's kind of what I'm looking at. So yeah, just that's kind of what I want to point out. These divergences build for a while and then they break. So we're just waiting for that break. Okay, gold. So gold had a big reversal week last week, and we're still above the trend line. So as you can see here, let me kind of mark it out with a different color. Okay, there, I made it green. This line is your bull trend in gold, and you can see really we've just held this support line for a while. More tags of it right in here. And recently on last week, we broke that, but then towards the end of the week, they bid it back up and recovered that trend line. So that was a bear trap. That's what I'm assuming. This is a bear trap where you break below, but you recovered it. And if you look at the weekly chart, we have, the week did not close. You can see here, we had a big tail and a big doji. That's a reversal candle, and we're starting to build on it this week. So I'd expect more buying to come into gold this week to help confirm that reversal candlestick. And ultimately, it would seem that we just saw the bottom in gold, the bottom being down here at 1682, with the next leg higher in gold to come. So as of right now, we're still holding that trend line. We saw the big break and recovery, and it looks bullish to me. The miners haven't quite caught on yet, but one thing I want to point out here on GDX, this is your mining ETF. So if we go down to the daily chart, you can see today we dropped down. I've got it circled. This is kind of the buy zone that I'm looking at for GDX, but we dropped down to this support level of 3130. That's a major level that goes back several years. You can see really, there it is right there, 31, it's about 31.30. That was major resistance for this entire bear market that gold was in, going all the way back to 2013. You can see we held resistance there, held resistance there, held resistance there, and then once we broke above, it's been support ever since. So broke above, and you can see we were support there, support back here, little slight dips below it, and that's what you want to look for. You want to look for little breaks below it. Those are stop rates. They break down below, run any kind of stops, and then recover it. So that's what we're looking for now is, a break below potentially, and then a recovery. But we held support here, and then recently, just today, fell down to that level, and we bounced off of it so far. So this is the zone of support. Now, it doesn't mean we're going to just stop right on the penny and start to run higher. We can chop around, kind of, run below, hit some stops. And I would expect that. But if we see that and then we see the recovery, that's your buy signal, in my opinion. And that would likely be the bottom for these miners. So I think we're in the zone right in here where the miners should be near the bottom. And I'm continuing to add to some of these miners. They look good to me. Again, they have bullish divergence as well. So you'll see GDX, another just indicator that helps build the case. You can see the bullish divergence. See how the PPO, the momentum's moving up. Now we have to move this down slightly, but we're still making higher lows in the momentum on the RSI and the PPO. So you'll see how we're trending up, and yet a slightly lower price right here. So that's bullish divergence. That you have a divergent low right here with higher momentum. Upward momentum like this often will lead price. So I'm expecting price to start to move up as well in the near future. Okay, quick trade idea that has not played out. It's not an actionable trade, but it's a trade setup. We'll put it that way. So we have, this is GNRC, which is Generac Holdings. They make generators. And you can see we have a clear uptrend line coming off the March 2020 lows on this daily chart right there, just walking up that trend line. We're at support right about now. You know, this is roughly the support line. We have not broken support. We do have negative divergence that has been building for some time. And so this high, this kind of price action right up in here is a divergent high, meaning we have a new high in price, but lower high in momentum. See that? It's a lower high. So we're waiting for a sell signal or a break of trendline support, which is right there. So we need to see a nice big impulsive breakdown candle where we break and the selling becomes impulsive. That's our next signal. That's our sell signal. And if we do that, I think we go ahead down to level of support 287.40 as the first level, and potentially more, but for now we'll just cover that one. And depending on when we break, but if we were to break now, that'd be a drop of about 27%. So I think that's the trade setup. Not actionable. Again, we don't have that break at trendline support, so no reason to short yet. But be on the lookout for it, and I'll keep everyone posted on that. If you guys find value in this content, leave me a thumbs up. And if you're new and want to learn a little bit more in detail on how to use technical analysis to find your own trade ideas, how to manage risk, take my course, link in the description below. That's all I got for you guys today, so I'm going to wrap up. Catch you guys on the next one. Bye.